Welcome again to our penultimate session, where we're going to be discussing distressed debt investing, restructuring in Turkey, and anything else connected with those two issues. We have two, again, esteemed, knowledgeable analysts here who are going to have a discussion together. It'll be a format with Nilay who will sort of lead that, and we're looking forward to a very interesting discussion and sharing the value of your knowledge. So I'll leave you to it, and I wish you good luck. Thank you.
Well, thank you, Chris, for your kind introduction, and good afternoon, everyone, and thank you for joining us today. I'm Nilay, and I'm a partner at NAZALI Tax and Legal Services Istanbul office at the M&A and Banking Department. I will be moderating today's session on distressed assets and restructuring in Turkey. We will be generally talking about trends and opportunities in distressed M&A investing and which type of restructuring will be the shocks over the next 12 to 24 months. And we will be talking about the prospects for buyers and sellers and whether the current crisis created the opportunity of a lifetime of distressed investors. And we have a distinguished speaker for this part of the panel today. Now I want to give the floor to Ozan Ozkural. And Ozan, we can start with, if you don't mind, how you can tell us about how has the pandemic affected both the emerging markets as well as the broader world of distressed assets.
Sure, thank you, Nilay, and hello all. Well, look, I mean, let's take a step back and then I think analyze what has transpired in the world so far since we have had to go through this paradigm shift of sorts in all of our lives, whether it's social, economic, or even indeed geopolitical at some stage. Before talking about distress, let's agree on the fact that what we are here right now is in the beginning, unfortunately, of a very deep and most likely a prolonged economic crisis. 2008 was a financial crisis. The remedy was central banks and governments flushing everyone with money, resulted in an asset price inflation around the world. The patient who was sick was not really totally cured, but it did not die. And 12 years down the line, the same patient has been living a toxic life and growing, and COVID-19 has ended up being the catalyst, not the cause, for the patient to be ill again. But now the patient right now is living a source of a multi-organ failure, which is a deep economic crisis. So what have the governments done? Governments had to decide, because it's a pandemic, the first one since 1918, whether to be accurate or be fast. And rightly so, they chose to be fast, and they recapitalized household balance sheets, corporate balance sheets, and a lot of companies that actually should have gone bust ended up surviving just now. But that is not going to continue for a long time. A lot of the fiscal policy elements and the stimulus packages that a lot of the governments have announced are either coming to an end at the end of September, early October, or will be most likely taken a couple of notches down. We already are witnessing a significant uptick in global unemployment. 40-odd million people in the US, roughly about 9 million people in the UK on the furlough scheme that's possibly coming to an end. So what that will mean for distressed assets is that, before we come to the EM side of it, that the world of distressed is going to get a lot busier. Now, that's true for the developed world as well as the emerging markets world. And what this in turn means is that we're going to see this hit the bank balance sheets around the world, and there is no escape from that no matter what. So that means one of few things for emerging markets. That means repricing, because whereas pre-COVID, a distressed asset, distressed debt level or returns could have been, I don't know, high double digits, like teens IRRs, now investors are getting similar returns back in the US, back in Europe. So moving on to EM distress, there will be an element of repricing, which means that the asset prices in question have to fall to a certain level. So therefore, I think we are in a period whereby for a while, countries, by printing money, they can get away with it. But when it starts hurting the bank balance sheets, then we are going to witness a dearth of supply coming into the market. So from a distress perspective only, a very significant year and the next few years most likely.
Well, thank you. How about the impacts on the UK-Turkey relations? How will the current economics and geopolitical climate impact UK-Turkey relations, and where do you see the opportunity?
I mean, look, the UK and Turkey have been long-time friends. I think UK remains a staunch ally of Turkey and has been so for a long, long time. The fact that UK is trying to circumnavigate Brexit also makes Turkey's geostrategic importance magnified vis-a-vis UK. The same goes true for Turkey as well, by the way. I mean, there are a number of different factors. UK will be looking to have as many sizable, developed friends, economic friends as possible, especially within the region. And Turkey obviously will be looking for as many Western allies as possible, especially in the face of a very difficult, I guess, geopolitical climate around where we are based. And I'm thinking about Libya, I'm thinking about the kind of Eastern Mediterranean, also thinking of different kind of areas towards our east. So I do see Turkey and UK expanding on its existing strong relationships. And the one, of course, interesting challenge is going to be that right now, UK is looking to do as many what we call rollover agreements as possible due to Brexit. What does that mean? Basically, the government is trying to take the existing EU agreements and replicate that with as many counterparties as possible. In certain instances, like with Japan, UK is trying to do what's called the rollover plus agreement, which basically is the rollover agreement plus additions and kind of different provisions around data privacy and cybersecurity. And Turkey and UK is talking to do its own bilateral agreement, but because Turkey is a part of the customs union, strictly speaking, that will have to wait until UK does its agreement with Europe itself, which was originally scheduled for October. But of course, life being life and politics being politics, that may be kind of delayed. And there, Turkey faces and will face an option whether to kind of do it anyway and kind of suffer the consequences or wait.
Let's see. How about the MPL training group?
Can I just add a bit more to that?
Sure.
Because I am familiar with the negotiations that are going on, and it is quite interesting. I mean, they've been working on this for 2 years, trying to formulate a free trade agreement with Turkey on the basis that we do have a deal with the EU, which now is looking risky as to whether we do have a deal with the EU. I think the important thing is that both countries are committed to having a deal, which is a good place to be. I mean, if there's one side not as enthusiastic as the other, then you usually get problems. Where both sides are committed to get a deal. So I think they will find a way. But as Ozan has mentioned, it could still be some way off before we actually understand exactly what deals are possible, and whether they're going to make it difficult for either country going forward. So it's a very sensitive area at the moment, and we don't want to have any friction between the two countries on our trade deal going forward. So we just keep our fingers crossed that the politicians will see sense and get us through it without too many problems.
One can only hope, Chris.
Yeah, we can only hope. Fingers crossed.
Yes, indeed. Sorry, Nilay, you were about to ask a question.
No problem. Thank you, Chris, for the input. As to my last question, how about the MPL trading? can you comment a bit on how you see the NPL trading world in Turkey evolving, and what are the main obstacles then ahead in the developments of this market?
I mean, look, when we talk about the NPL market, I think we have to split it roughly into consumer NPL and corporate NPL, two different beasts altogether. You know, I've been in the distressed asset and debt world for close to 20 years or so. And I like both of them, but both of them have different requirements and different ways to do it. On the consumer side, you got to take a look at the propensity of Turkish banks to be able to sell their NPL portfolios, I guess, freely and in a like a market price level. We had seen an uptick on that towards middle to end of last year. But then the banks slowed down on their NPL sale activity. That was due to a couple of things that have changed in the legislative landscape, and banks kind of more actively looking to manage their balance sheets. That I cannot imagine supply not coming onto the market with prices that are going to be more distressed than before, let's just say near term. And that basically is a game where you have to have the right asset management company, because only asset management companies in Turkey are licensed to be able to buy and service NPLs. That sector is missing. In that sector is more players that have had multilateral cheap funding in the sector. There are a couple of players, a couple of very large players that dominate the market, but that's not enough. By the way, the consumer NPL sector is often misunderstood due to the kind of perception of what that entails. If done correctly, very important, if you will, a window for the consumer credit sector, allowing obligors, individual consumers, people that are more often than not in a tough place financially, to be able to pay their debt, come back to the borrowing market, and kind of correct any black marks that may happen or may exist in their credit scores. So therefore, if done correctly, it is very important for a developing country to have an expanding consumer NPL sector. Now, a lot of the players, a lot of the big funds in the world have been interested and focused on the corporate NPL sector. As you know, as we all know, there are a couple of major names and positions that the banks are quite keen to sell. So far, a couple of things have stopped that sale from happening. Number one, pricing expectations. I think more or less banks in Turkey are unable and unwilling to give anything more than a 30% haircut, partially driven by the 2001 embezzlement law that still exists, that basically makes the liability side of selling at a deeper discount very dangerous and unattractive for the top management of banks. Number two, the legal legislative landscape in terms of how that sale can occur, through which vehicles, and what the tax position of those sales are, but also partially that the investors that have been looking to get their hands on those restructurings, because let's face it, corporate NPLs do mean significant restructurings, which is obviously very political. They've been expecting a very unrealistic level of a haircut. I mean, last time I checked, people were kind of looking for a 70% haircut on the multi-billion-dollar corporate debt. That's never going to happen. So I think its legislative landscape has to change and kind of become more clear. And also, both counterparties have to kind of agree on a fair market price. Now, of course, a problem that's facing international investors in getting their hands on these NPL portfolios also is the fact that they're finding it very difficult to price the dollar TL or pound TL risk. In the short term, it's okay, you can hedge that risk, but it's very difficult to hedge a long-term dollar TL position. So the propensity for Turkish lira to fluctuate will also be an important factor.
Thank you, Ozan, for your views and expertise on generally distressed MA investing and upcoming news for the world. Unless you have any final remarks, we may switch to comments from the audience, and you may wish to attack those questions, if any.
Sure.
Okay. Final remarks from, sorry, I didn't get that.
We may switch questions from the audience if any, and one would like to answer and attend to those questions if he doesn't have any final remarks.
Yeah, just a second. I don't think we're getting too many. Questions from the audience. I mean, are you picking up anything?
I opened the, I allowed them because normally we weren't allowed them to ask you questions during the panel. Now I let them to ask you questions.
We may wait a couple of minutes for the question.
So yeah.
Okay. Can I, Nilay, can I ask you a question? I mean,
Sure.
Given your business, I mean, what any transactions at the moment? Is your work focused on that, or are you dealing in more broadly financial issues?
No, actually, I am more concentrating on the M&A and banking and finance projects at the firm. And we are about to close the deal, but we cannot talk about the distressed assets at the moment because the transaction was signed just before the pandemic, and we are about to close. So we just have to adjust some clauses before the closing, actually, to actually cover the COVID-19 issues, but they are not really related to distressed assets. Our assumption is that we will be dealing more of these issues, and we probably drafting and negotiating more of these distressed asset M&A deals in the upcoming days. But currently, in my experience, we are not currently dealing with any of these issues at the firm.
And what's your feeling for the future? I know it's a difficult question to answer. I mean, in terms of M&A, do you think M&As, we're going to see more of them, and will they be domestic or will they be international?
Well, we will be definitely seeing more of the M&As. Probably they will not be big ticket size, obviously, but we will be. It will be more on the seller-friendly environment. I would say I'm not pessimistic about the upcoming deals. Well, the market is, I think, after the 3-4 months following the March, it becomes to actually kick off, and we are seeing investors both from the local and the international market who are trying to invest, actually, who are trying to buy assets in Turkey, and I would say we will be seeing more of these assets in the coming months. Maybe after New Year, but there will be more. That's our assumption.
Yeah, I mean, we're experiencing some inquiries at the moment of UK companies who are seriously thinking of moving away from China and Southeast Asia. They want to shorten their supply chains. The trust, shall we say, is being questioned regarding China, and they're looking to bring their manufacturing or their suppliers closer to their domestic market, and this is a great opportunity for Turkey, obviously.
Definitely, this is our expectation as well.
Yeah, so
definitely.
I mean, one company which I can't name, but they initially they were just looking to source from Turkey, but when they thought about it, and particularly because of Brexit and what could happen there, that maybe they should invest in Turkey and either partner with Turkey or acquire a Turkish company. So there's that sort of thinking going on, definitely, which probably wouldn't have gone on before COVID.
That's true. I share the same view with you, and currently there are several incentives, actually tax incentives, and establishing a company and doing business in company is less bureaucratic compared to the other parts of the world, to Europe, I would say. So we will definitely see increase in the demands from the foreign investments due to after the COVID-19.
The important thing is, for the government to, create a more, what should I say, open playing field. I think there needs to be work done there that, makes it more attractive from a government perspective to invest in Turkey. So, but the opportunities are there, so I'm sure they will react.
Sure.
Okay, a minute. Are we getting any questions from the floor?
No, I didn't see. Actually, I checked the boxes again. No, they didn't.
Okay.
I mean, I stopped it when it started actually, and then just open it again. So yeah, because otherwise there's an interruption. That I didn't want them to interrupt you during the time.
Okay, Ozan.
Yeah.
Is there anything else you contribute?
No, nothing else to contribute on the stress side. So have a great forum, and hope to see you sometime.
Okay.
Thank you.
Thank you so much.
Okay.
Thank you.
So thank you. We apologise. It's been short and sweet, but you've obviously had an interesting discussion, and we welcome that. And if there's any questions that do crop up later, then we can deal with them offline. So we may be back in touch with you. Anyway, thanks again. Stay safe.
Thank you.
Okay.
Thank you so much.
You too. Bye.
Thank you. Bye.
Bye. Bye.